For an instant audit, we're joined by New Oak Capital founder and president Jim Frischling, back with us this morning. Nice to see you, Jim.
Nice to see you.
So whether or not we agree or disagree with this bill, it looks like it's coming. At least there's going to be a version of it that we're going to get a chance to look at. What's the first thing that draws your attention to what is this version coming from the Senate?
Well, I think it's been almost a long time coming in terms of the town hall meetings and the heated debate. But you're right, here we are, and I think both sides recognize that action is going to happen, and there is going to be a bill. And I think we're now just kind of narrowing whether it's a full public option, some sort of public insurance, or the trigger. But I think we're narrowing the issues down to just a few before we get the results. And I think somewhere in the centralist would probably be where we come out, just because I think the idea is to get this thing done, and again done by year end.
So let's say it's a trigger, just for argument's sake, because that's what Olympia Snowe, who's kind of the wild card in all this, so to speak, the Democrats would love to have her Republican support. That's what she's favored all along. So let's say it is that trigger. What does that mean for the health insurance companies if a triggered public option is put in?
Well, twofold. One is certainly the insurance premiums have just jumped up fairly, not insignificantly quickly. And I think part of that is an anticipation of what might be coming. And to a certain extent, I would expect that if the trigger option is put into effect, if this is the effective plan, we're going to have, I guess, some level of competitive threat to that insurance industry looming,
right.
Which ideally should bring the effect that the government of the administration is looking for, which is to potentially at least cap or curtail some of the increases that we're seeing. But increases recently have been dramatic.
So do you avoid the insurance companies then, or do you jump in and buy? Is there any opportunity here because their premiums are up 15% compared to normally 7-8% in previous years?
I mean, again, the increases for small companies have been in double digits. So on that basis, I think certainly there's an opportunity to play in the insurance space. And I look at the insurance space as two sides. There is their asset management business and obviously their liability coverage business. But again, I'm not enthusiastic about the uncertainty in terms of the government stepping into this industry and what it might mean for them, especially if the goal of the intervention or the public option is in fact to curtail or
right.
create a competitive alternative.
All right, Jim. James Frischling will be with us all morning from New Oak. Thank you, Jim.
Thank you, guys.
Well, and what could be the founder of New Oak Capital, Jim Frischling, is back with us to talk a little bit about this. Jim, again, kind of like healthcare. Some people think commercial real estate is going to be a big deal. Others don't think it is. Where do you stand on that side of the debate, and how are you preparing either way?
Sure. This is clearly some good news. A company with 1,800 employees and 47 offices worldwide filing for bankruptcy is certainly a negative sign, but I do think it was expected. If you look at KKR, one of the equity holders in this company, they marked this down to 0 months ago, back in March, and I think this is more of a legal maneuver to allow them a chance, the company that is, to negotiate and try and create some of these debt for equity swaps. Better to do it in this format than without.
People in your business often look at situations like this as opportunities to invest, whether it's Capmark's bankruptcy or just commercial real estate's downturn in general. And we've talked about this in the past where you think that there's been mispricing and there's opportunities to invest. Talk about that. Is that still the situation? And talk about that a little bit as opposed to the fact that other people say this is a real big problem for the economy.
I think that's absolutely right. This does create a tremendous opportunity. I know people are very concerned about the commercial real estate space, and they have every right to be. I don't believe, and at New Oak Capital, we don't believe this is the residential mortgage crisis part 2.
What's the difference?
Almost an institutional nature to the commercial market, that you can actually get together and negotiate, and assets will trade with far greater frequency without, to be candid, the messiness that comes with mom, pa, and owning homes. It is much more orderly, and if you look at the 100+ bank failures that have taken place, that is just another sign of the strain on the commercial space. But when these banks go, the assets move, and you're finding bids for them. So it does create a lot of opportunities.
So where
to
are
buy.
you looking? Is it in REITs, or how do you get involved if you're the investor?
As the investor, what we're looking at is some of the more senior tranches, in the CMBS transactions, and that's in the securitizations.
Securities.
That is correct, and looking at some of the formerly AAA or senior rated tranches that might be being discarded unnecessarily because of forced selling, and looking to make sure we understand those risks. And I think there's a lot of opportunities.
How much due diligence does that take, though, to figure that out?
It takes quite a lot of due diligence, as you can imagine. These are backed by pools of hundreds, and in some cases there could be well, rarely thousands, but hundreds of loans that are repackaged and therefore end up in these securitizations.
You don't have that job in your office, do you? Is that for an intern? Where do we give that?
We have a lot of great people doing that work. I swear you guys are great.
Right.
You're on record.
The boss says, we hope you're right, because that means that people like you come in and buy these things, and they, not some sort of big collapse that affects the economy. Anyway. Ashley, back over to you now.
Well, a lot of numbers from earnings to economic data this week, and it may provide investors with some direction as stocks try to level off after a choppy trading week last week. For a look at the week ahead, Jim Frischling back with us from New Oak Capital. So, Jim, it's November. We're going into November. Is your firm on the sidelines now, kind of waiting to see what happens at the end of the year? Or are you actively participating in this market?
Again, at New Oak Capital, we're far more focused on the debt side. And with that in mind, we are looking at a number of opportunities, we think, to deploy capital. The risk premium, we think, has been somewhat reduced, and there are some interesting things.
Give us an example, generally speaking, of where there's opportunity.
In the bank recapitalization space, we believe...
where banks are failing. Where
banks are failing, and there's a huge need for capital. The fact is there have been a number of transactions which present investors with an interesting opportunity to get involved with the space. It's very popular right now. It's not easy to get involved. As you can imagine, the balance sheets of banks need a lot of due diligence and almost forensic due diligence at that. But it's an interesting opportunity, in our opinion, to deploy capital, and we're spending a lot of time on that.
We've had more than 100 banks fail just over the weekend, right? That we've seen a couple more banks fall. How much more opportunity do you see there? Do you see another 6 months of that? Do you see another year of that? Another 18 months? What's the horizon like?
Certainly another year of it. Banks tend to want to hold out on their own for as long as they can, and that's kind of creating this cliff-like environment where they hold out until they can't, and then you see the failures. And a number of banks, I think, are now looking to be a little more proactive. And it's not just ourselves, but a number of firms in our space are getting very active in working with banks to assess what alternatives could put them in a better situation before the FDIC has to step in and take control.
Buy up some of those assets, I guess. Now, all right, let's talk a little bit about the economy. The big report this week is going to be GDP. It looks like we'll get positive growth. It's just a matter of what the number will be later on in the week. Where do you think we are in all this? And I assume you agree we'll get positive growth in the third quarter.
I think we are going to see positive growth, and it seems to me that the stock market has certainly made some predictions. The earnings have been positive. I guess 78% of stocks announcing.
Does that mean anything, by the way, that there'll be positive GDP growth? Because all the headlines will say recession over, economies grow. I mean, is there anything in all of that?
I think there is some validation to what a number of the more bullish economists have been putting forward, that this does in fact suggest that there were some horrific quarters, and that the bottom, to a certain extent, has been reached, and the situation
has turned. Are we out of it, though? What about this double dip, this W-type recession? You believe that? I have taken the Great Depression scenario Part 2 off the table. Okay.
I'm not alone in that. I think that's not an easy. That is an easy statement, and I'm not looking for the double dip at this point. Are we going to be a straight line rally? I mean, I think the stimulus is now the stimulus packages are somewhat need to be removed, or somewhat, I guess, lessening.
Yeah.
In which case, can the consumer ride this thing on their own? They do represent 2/3, again, of I guess, contributing to the uptick of these markets.
They do indeed, Norm. Maybe less when we get through all this. We'll see. All right, Jim, thanks a lot. Appreciate all the time this morning, and you'll be with us on our internet show in the next hour. Speaking of which, we...